Alright guys, I'm going to go through the problem solutions for Chapter 5. It is what we did in class, and I just want to give everyone the same opportunity to review the information that we looked at in class so that you are prepared for the Chapter 5 test. So here we go. Looking at the problem for Chapter 5, problem 5.1, we are given the trial balance for the Nixon Company. We need to drop that into our worksheet, and then we need to make the following adjustments as shown here in step 2. Okay, so we need to adjust the supplies on hand, or the supplies and the insurance and the depreciation for the period. Now, one thing that keeps coming up with students asking me questions is the way the authors word the adjustments is never quite exactly the same, and you really have to think about what they are saying, especially with supplies. Are they telling you what you have left, or are they telling you how much you have used? You've got to make sure you understand which that is, because in the adjustments column you want to record what was used, so that in the adjusted trial balance you are showing what you have left in your asset of supplies. And I always use the example of a cupboard full of toner or pencils and paper or whatever. What's left in your cupboard at the end of the month is what goes in the adjusted trial balance. Alright, so looking at the first adjustment for supplies, they're telling you that you have supplies on hand at the end of the month of $4,200. You started the month with $39,400. So if you subtract $4,200 from $39,400, that will show you what you used. Let me pull up my calculator really fast, and I'm not going to do this with everything, but I'm going to do as much as needed for a second here. Okay, so 39,400 minus 4,200. Oops. Means that you used $35,200 worth of supplies during the month. That is your adjustment. Okay? Moving this down, down. And you are reducing your supplies by that amount. Gosh, I need my drawing tool here. I don't have a pencil. Okay, sorry. You are reducing your supplies by $35,200, and your matching entry is your supplies expense in the debit, $35,200. Okay, the next, yikes. The next adjustment was expired insurance for $5,500. So you have expired, oh gosh, expired insurance of $5,500 in your prepaid insurance as a decrease, and you have an insurance expense of $5,500 in the debit column for insurance expense. Okay, and last is your depreciation expense for the period was $1,600. And that one is a little simpler. It's accumulated depreciation for $1,600. That's your contra asset account, and your depreciation expense for $1,600. Okay, now the hard part is taking this to the next two columns, and it's so easy to get goofed up on this. And I was telling students today that if you need to color code your columns, that's fine. If you need to use colored pencils, or if you're using the computer to do it, however it helps you get on the right columns is fine, because it's very easy to go from a debit to a credit accidentally. Okay, so your first cash goes straight over, accounts receivable goes straight over, your supply line needs to be calculated, so you're showing the $4,200 left at the end of the period. Your prepaid insurance is reduced to $60,500. Equipment is the same. Accumulated depreciation, it's the first month that you own that equipment, so you don't have anything already accumulated. so it's just a $1,600 credit. Accounts payable and capital are the same. Drawing is the same. Fees income is the same. And then with some of your expenses, you need to, no, there's nothing to add. It's just transfer them over either from the trial balance or the adjustment line. Okay, so that's finishing the adjusted trial balance. Then you take everything above, everything, assets, liabilities, and owner's equity accounts are going to the balance sheet section of your worksheet, and everything beginning with fees income goes to your income statement columns of the balance sheet. Okay, after you've looked at your solutions, and if you still have questions, please remember to contact me so I can talk you through what is confusing. All right, so then problem 2 has given you the adjusted trial balance and what the adjustments are, and you're supposed to work backwards to get the original trial balance numbers. And this problem goes against everything I know about teaching. It's really hard to grasp these concepts anyway, and to have you do it backwards is very unnerving. So if students got these correct, I'm happy for you guys, but I don't want you to sweat this one out. In fact, if it is not a problem you even want to do because it is backwards, just skip it. I really don't care. If looking at the solution helps you figure out what you were doing wrong, that's fine. But remember, you're getting the adjusted trial balance, so you're working backwards once you put the adjustments in, and then you are subtracting or adding, whichever case, to get your original trial balance numbers. I just don't want to focus on this one because it's not what you'll be doing on a test. You'll be doing things the correct way, starting with the trial balance and then the adjustments. All right, moving on to problem 3. Problem 3 has you looking at a completed worksheet, and from that worksheet building your financial statements. So all the hard work is done for you. So we just need to take the information from the income statement and the balance sheet and actually transfer it into our real financial statements. Okay, so to make the income statement, which is the first financial statement we always complete, we start with our fees income, and then we list our salaries. Do notice that my expenses are not listed in alphabetical order, and you have been taught and told to do your expenses in alphabetical order. So my answer is not proper. However, I will not take off any points for this order here. I just need the total to work out for us all. Okay, so our net income ends up being $82,800. We need that number in our statement of owner's equity. We get this $109,000 from our worksheet. Let me pull that back up. $109,000 is what we started with. The Vasquez started with $109,000. That doesn't change throughout all of our adjustments and things. That's the same number. So $109,000. We mark our income for December that we just calculated in the income statement, and the withdrawals come straight off of the worksheet. $8,200 of a drawing. Okay, to get our increase in capital at $74,600, add that to our original capital, and we end up with $183,600 capital for Rosa Vasquez. Okay, another tip is when you're doing financial statements and you're using the 2-column forms that you are given, remember that the first column is used to add or do math, add or subtract, do math, and the right-hand column is where you have totals that you're dealing with. So if you're confused by that, I mean, I know you guys look at old examples before you do these. That helps a lot. Okay, so we've got the income statement and the statement of owner's equity. Next, we need the balance sheet. The balance sheet numbers come again from our last two columns of the worksheet. The one thing that's different here is we do show that book value of our equipment. It doesn't say book value, but when we're doing this calculation with our equipment less the accumulated depreciation, the $83,300 is showing the book value of our piece of equipment. Okay, so again, you're looking at your totals to equal 196,600. Right, moving on to problem 4. Problem 4. Back up, went too far. Okay, problem 4 is preparing a worksheet and the financial statements, journalizing your adjusting entries, and posting to the ledger accounts. That's like the whole shebang. All right, so we have to complete the worksheet that they've given us and then go through all of the financial statements. They've given us the names and numbers of our ledger accounts that we will need to do the posting. And then we have our adjustments that need to be made. All right, so back to the worksheet. Starting with the trial balance, making sure you're totaled correctly on the trial balance. And this time we're going to take a closer look at the adjustments. So adjustment A for supplies, we're going to look in the book, make sure we understand our adjustments. So supplies were purchased on January 1st originally, and at the end of January what we had left is $1,600. Okay, so looking at our supplies, we know we're going to end up with $1,600 in our adjusted trial balance. We started with $97.50, so using our calculator, $97.50 minus $1,600 means we used $8,150 worth of supplies. So that's what we are reducing our supply account by. That's why it's a credit, and our debit is the supplies expense for $81.50. Okay, adjustment number 1. Adjustment number 2. The prepaid advertising contract was signed on January 1st and covers a 4-month period. So we need to look at the prepaid advertising is $12,400. $12,400 covers a 4-month period, so we're going to divide that by 4. So we're going to end up using $3,100 per month until we get that prepaid advertising down to 0. Okay, so we're doing the end of the month, so we're going to expense this amount. So we're going to reduce prepaid advertising, our asset, by $3,100, and our match is advertising expense for $3,100. Okay, adjustment number 4. Rent of $2,100 expired during the month, so we obviously have some prepaid rent. So we need to reduce prepaid rent by $2,100, and we need to rent expense in the debit column for $2,100. Lastly, depreciation is computed using the straight line method. The equipment we purchased has an estimated useful life of 10 years and no salvage value. 10 years and no salvage value. So our equipment purchased was for $33,600. $33,600, and that's useful for 10 years. And we're using 1 month, so we divide by 12. So $280 is our monthly depreciation for that piece of equipment. So in our accumulated depreciation, we credit $280. Accumulated depreciation is a contra asset account. And then we have a depreciation expense for that equipment for $280. Okay, now the hard part is getting straight as we move over to the adjusted trial balance. Okay, so for the first one that is a calculation is supplies. Make sure you subtract the credit from the debit. Prepaid advertising, make sure you subtract the credit from the debit. Prepaid rent, make sure you subtract the credit from the debit. Equipment always stays the same. Accumulated depreciation. Okay, so then, let's see, where was I? Sorry, had to pause. Making sure you're moving your adjusted trial balances over correctly. I think we went through all the ones that were calculated, and we were down to the capital and the expenses. You just have to make sure you're careful that you go in the correct columns. All expenses are debits. Fees income is a credit. Drawing is a debit. Capital is a credit. Okay, so then this is the point where you draw your line, kinda, between your drawing account and your fees income. And if you do that artificial line on your screen or on your paper, then you know that everything above the line goes to the balance sheet and everything below the line goes to the income statement. Then as you get your totals for those two columns, you should end up with 4 numbers that are not the same in your first go on the totals, but when you subtract the smaller one from the larger one, you should come up with the same number on both income statement and balance sheet, and that helps you know that you are going to balance, everything's going to be right. And then if your number is, if your expenses are less than your revenue, you know you're going to show this as income. So your income for this month is going to be $47,870. All right, all of these numbers totaling under the income statement and the balance sheet are only in, they're used in your worksheet to make sure you are balancing. Those are not actual numbers that are reported on financial statements, except the $47,870 is, but you'll see that in just a second. Okay. So looking at our income statement and our statement of owner's equity, again with the columns, you're going to be calculating in the first column and you're going to have your totaling numbers on the right hand side column. So there's our $47,870. Our statement of owner's equity, the $61,000 came from our trial balance actually. Our net income came from our income statement. Our withdrawals came from our worksheet. Our increase in capital is calculated by us by subtracting $8,000 from $47,870, and then we add our increase in capital to our beginning capital to end with $1,870. Our balance sheet, these numbers came directly from the top end of our worksheet. What we are actually calculating in the first column is only book value. So the equipment is listed there and less the total depreciation. So this number, $33,320, represents the book value for our equipment. The numbers on the bottom, accounts payable came from our balance sheet lines in the worksheet, and the owner's equity came from the statement we just completed. Okay, adding those together, we should total. Now then, the next thing we need to do is put our adjusting entries into the journal and then take each line by line and put it into the appropriate ledgers. So we already did all the work calculating this. Here we're just going to be officially putting in our general journal so it gets into the ledgers. Again, or not again, but on adjusting entries, just a notation again, you don't have to put explanations underneath the adjusting entries. Having the title in front of them is all that needs to be there. Okay, and then line by line we go to the ledgers to put in the adjustment. In this case, we had a beginning balance for supplies, and so we have two entries in the supplies, the prepaid advertising and the prepaid rent. Okay, those should look the same as your adjusted trial balance, eh? Then, rest of the ledgers, expenses only have one thing in them, so that's easy to do. Oh, that's it. Phew. All right.